Hello everyone, and welcome back to Explain the Charts. Today is October 23rd, 2025, and we're taking an in-depth look at Litecoin, or LTCUSD. There is a ton of conflicting information out there right now, from massive ETF hype to serious bearish warnings, so our goal today is to cut through the noise. We will analyze the latest news, and then dive deep into the charts to see what the price action is telling us. First, let's talk about the headlines, because the primary driver for Litecoin right now is the intense speculation around a spot ETF approval. Major asset managers like Canary Capital and Grayscale have updated their filings, a step many analysts see as the final move before a potential SEC green light. The decentralized prediction market Polymarket is giving an ETF approval by the end of 2025 a staggering 95% probability, which is fueling a lot of this bullish sentiment. We've also seen reports of large holders, or whales, accumulating around 300,000 LTC after a recent dip to the $65 level, suggesting strong hands believe a rebound is coming. Some long-term predictions are incredibly bullish, with one analyst eyeing a potential breakout from a massive 7-year pattern that could theoretically send LTC towards $750. However, the narrative is not all positive. The SEC has also delayed its decision on some applications, citing new listing standards and creating significant short-term uncertainty. More worryingly, at least one report highlighted a recent, brutal 25% crash from over $120 down to near $90. This analysis painted Litecoin as an old coin, with a bearish trend, weak momentum, and declining trader interest, suggesting a potential drop to $80 if key support fails. So we have two completely opposite stories, a potential ETF-fueled moonshot versus a slow bleed into obscurity. This is where the charts become crucial to understanding what's really happening. Looking at the daily chart for the past year, we can see this conflict playing out perfectly. Notice this formidable resistance zone between $135 and $140. Price was aggressively rejected from this area back in December 2024, again in January and February of 2025, and most recently just a couple of weeks ago. This is a major supply zone where sellers have consistently stepped in with force. On the other side, we have a critical support level that has formed in the $85 to $90 range. We saw price bounce hard from here after the steep correction in March, and it's the same zone that held the low of the recent crash. These two levels, the $135 to $140 ceiling and the $85 to $90 floor, define the major trading range for most of this year. Now, let's zoom in on the most dramatic part of this chart, the action from this past month. Here we can clearly see the buy the rumor pump leading into early October, driven by that ETF excitement. On October 9th, price surged over 6% on strong volume, breaking past several resistance levels. But look at what happened on October 10th. This is a textbook failed breakout and a catastrophic rejection. Price opened at nearly $126, wicked all the way up to almost $136, touching that major resistance zone, and then collapsed. It closed the day at $97, a nearly 23% crash in a single session on massive, overwhelming volume. This single candle tells a story of extreme seller dominance and completely erased weeks of gains. This is the crash the bearish reports were talking about, and it's a huge warning sign. Following that crash, the price found its footing right at that critical support zone around $90. Since then, we've seen a weak bounce and are now consolidating just below the $93 mark, which aligns perfectly with reports of sluggish momentum. The volume has dried up significantly, indicating indecision as both buyers and sellers wait for the next catalyst. To get a better feel for this current consolidation, let's switch to a lower time frame. On the 1-hour chart, we can see the anatomy of this recent price action more clearly. Here is the massive drop on October 10th. After hitting the low around $90, we had an initial relief rally that topped out around $102. This level was rejected, and since then, we've been making a series of lower highs, putting constant pressure on the support below. This pattern suggests that bears are still in control on the shorter time frames. Every attempt by bulls to push the price up has been met with selling pressure. The price is being squeezed into a very tight range, with the floor at $90 becoming increasingly important. For an even closer look at the current market sentiment, let's drill down to the 15-minute chart. Looking at the most recent intraday action on the 15-minute chart, we see a microcosm of this struggle. Over the past day, the price has been choppy and range-bound, oscillating mostly between $92 and $95 before a final drop. There are small bursts of buying volume trying to defend these levels, but they're quickly met with selling that pushes the price back down. This is the weak momentum in action. There's no conviction from either side to make a decisive move out of this tight range. This kind of price action often precedes a larger move as pressure continues to build. The key takeaway from the short-term charts is that the immediate path of least resistance appears to be downwards, retesting that crucial $90 support. Now, let's pull back to the daily chart to put it all together and discuss what to look for next. So, to recap, here are the most important price levels to watch for Litecoin. The ultimate resistance, the ceiling that must be broken for any significant bull run, is the $135 to $140 zone. Before that, we have intermediate resistance at the psychological $100 level, and then a more significant zone around $115 to $120. The most critical support right now is the floor from $85 to $90. This level has held twice on major sell-offs, and its importance cannot be overstated. If that level breaks, the next logical support target is down at $80, with the potential to revisit the $65 area after that. So, what are the likely scenarios from here? Let's outline a bearish and a bullish case. The bearish case, which I believe has about a 60% probability in the short term, is that this week consolidation will fail. Price will break below the $85 to $90 support zone. This would be a very bearish signal, likely triggering further selling down to the $80 level. This scenario is reinforced by the massive rejection from $136 and the subsequent series of lower highs on the hourly chart. The bullish case, which I'd assign a 40% probability, requires buyers to step in and defend the $85 to $90 support zone vigorously. A strong bounce from this level on increasing volume would be the first positive sign. For bulls to truly regain control, they need to reclaim the $100 level and then push through the $115 resistance. A confirmed positive development on the ETF front would be the most likely catalyst to make this happen. Long term, the picture is entirely binary and depends on the ETF. Approval could realistically open the door for those higher price targets of $200 and beyond as institutional money flows in. A rejection or continued ambiguity could see Litecoin's relevance fade, confirming the bearish old coin thesis. So, the things to watch are simple. First and foremost, any news from the SEC. Second, watch the $85 to $90 support level like a hawk. A breakdown or a strong bounce from there will likely signal the next major direction for Litecoin. Finally, please remember that this is not financial advice. Cryptocurrency markets are extremely volatile and carry significant risk. Always do your own extensive research and make investment decisions based on your own risk tolerance. Thanks for watching Explain the Charts, and we'll see you in the next video.